eyes. What I'm about to tell you could be the difference between building wealth and watching your money evaporate right before your eyes. I don't care if you're a seasoned investor or just starting out, this message applies to every single one of you. We are heading into a financial environment that will punish people who play it safe. And when I say punish, I mean absolutely destroy the purchasing power of anyone sitting on cash thinking they're being smart. They're not being smart, they're being foolish. Before I get into the specifics, I need you to do something for me right now. Hit that subscribe button, smash it, because the content on this channel is designed to make you money, protect your wealth, and give you the strategies that the wealthy use every single day. If you're not subscribed, you're missing out on information that could change your financial life. So do it now. While you're at it, hit that like button and drop a comment below telling me what percentage of your portfolio is in cash right now. I want to know because I guarantee some of you are making a massive mistake. Here's the reality: cash is trash. I've been saying this for years, and it has never been more true than it is right now. So you might think that having money sitting in your savings account making 2%, 3%, maybe even 4% in some high yield accounts means you're doing okay. You're not. You're losing money every single day. Inflation is eating away at your wealth like a silent killer. While you're sleeping at night thinking your cash is safe, it's losing value. The cost of everything, groceries, gas, housing, healthcare, is going up faster than the interest your bank is paying you. Let me break this down in terms everyone can understand. If you have 100,000 sitting in cash and inflation is running at 5 or 6%, and trust me, it's higher than what the government tells you, you're losing 5,000 to 6,000 a year in purchasing power. That's real money vanishing into thin air. Your bank account might say 100,000, but in terms of what you can actually buy with that money, you're getting poorer every month. This is financial suicide, and I see people doing it all the time. People come up to me and say, I'm being cautious. I'm waiting for the right opportunity. I don't want to take risks right now. I look at them and say, you're taking the biggest risk of all. You're taking the guaranteed risk of losing money. Because that's what holding cash is, a guaranteed loss. At least when you invest, you have the opportunity to grow your wealth. Sitting in cash isn't being cautious, it's being ignorant. I know some of you are thinking, what about a recession? What about a market crash? Shouldn't I have cash on the sidelines ready to deploy? And my answer is yes, you need liquidity. Every investor needs liquidity, but there's a massive difference between strategic liquidity and hoarding cash like you're preparing for the apocalypse. Strategic liquidity means having enough to cover emergencies and to take advantage of opportunities when they arise, maybe 3 to 6 months of expenses, a little more if it helps you sleep at night. Beyond that, every extra dollar sitting in cash is a dollar that's not working for you. Wealthy people don't hold cash. They hold assets that generate income and appreciate in value, working for them 24/7. Real estate, stocks, bonds, businesses, commodities, these are the vehicles that build wealth. Cash is what you use to buy those vehicles. It's a tool, not a destination. If you're holding massive amounts of cash, you're using the tool wrong. Right now, central banks around the world have printed more money in the last few years than at any point in history. When you flood the system with money, what happens? The value of each individual dollar goes down. It's basic economics: too much supply, lower value. Your cash is being diluted every day by monetary policy that's completely out of your control. You can't stop it, you can't fight it. The only thing you can do is protect yourself by getting out of cash and into assets that hold their value or increase in value. Think about it this way: if I told you I had an investment that guaranteed you would lose money, would you put your hard-earned savings into it? Of course not. But that's exactly what you're doing when you hold cash in this environment. Guys, you're choosing the guaranteed loser over potential winners. It makes no sense, yet smart, educated, successful people make this mistake every day. They work against themselves. Here's exactly what you should do instead. First, dividend-paying stocks. This is the backbone of my portfolio, and for good reason. When you own dividend-paying stocks, you own pieces of real businesses that generate real cash flow and pay you every quarter. It's passive income, money deposited into your account while you sleep. I'm talking about stable, reliable companies in utilities, consumer staples, healthcare, and financial services that have been paying dividends for decades and increasing them year after year. In an inflationary environment, many of these companies can raise prices, which boosts profits and increases dividends. Your cash sitting in the bank, it's going down in real terms. A diversified portfolio of dividend aristocrats, companies that have increased dividends for 25 consecutive years or more, can yield 3 to 4%. That's just the yield. Stock prices appreciate too, giving total returns of 8 to 12% annually over the long term. Compare that to a savings account paying 3% while inflation runs at 5%. It's not even close. Second, bonds. I know bonds seem boring, but after years of low interest rates, rates have spiked, making bonds attractive again. You can lock in yields of 5–7% on quality corporate or government bonds. Bonds provide balance. You don't put everything in stocks or everything in bonds. You ladder your bonds, buying bonds with different maturity dates, so you always have money maturing to reinvest at current rates. Your cash in the bank, just sitting there eroded by inflation. Third, real estate. Real estate is one of the greatest wealth building tools in history. If you can't buy property, REITs are an excellent alternative. REITs own income producing property and pay out 90% of their taxable income as dividends, often yielding 5% or more. Real estate tends to appreciate over time. Rents rise with inflation, and you get both income and protection from inflation. Diversification is key. Spread risk across multiple asset classes: stocks, bonds, real estate. Don't put all your eggs in one basket. And most importantly, don't sit in cash earning nothing while inflation destroys you. A diversified portfolio can weather any storm. Markets crash. Bonds and real estate cushion the blow. Interest rates spike. Dividend stocks and REITs adjust. Inflation runs hot. Real assets keep pace. This is how you protect and build wealth. Years ago, I met an investor who had $3 million in cash. He was waiting for the perfect opportunity to buy stocks at a discount. Meanwhile, the market went up 20%, 30%, 40%. He missed all that growth. Even with small corrections, he didn't buy, convinced an even bigger crash was coming. Today, that $3 million has the purchasing power of maybe $2 million. He lost $1 million by doing nothing. Trying to be safe guaranteed his failure. Don't be that person. The perfect time to invest is always now. Time in the market beats timing the market every time. Nobody can consistently predict market tops and bottoms. People who build wealth stay invested, keep putting money to work, and understand that markets go up over time despite short-term volatility. Look at your portfolio. How much cash are you holding? If it's more than 6 months of living expenses, deploy that capital immediately. Open a brokerage account if you don't have one. Buy dividend stocks, bonds, REITs. Just get that money working for you. Every day you wait is a day you lose money to inflation. Every week on the sidelines is a week you miss out on gains. This isn't about being reckless. It's about being rational, understanding basic economics, and acting accordingly. If the market feels high or the economy feels uncertain, that's normal. There's always a reason not to invest. If you wait for perfect conditions, you'll wait forever. Uncertainty is the price of admission. Holding cash doesn't eliminate risk. It's choosing the guaranteed risk of losing purchasing power. I've built millions by understanding that cash is a depreciating asset and real assets build fortunes. If you want different results, you need to act differently. Stop hoarding cash and start investing in income, generating appreciating assets. Here's my final challenge: take action. Not thinking about it, not researching for 6 months, but actually doing it. Take 10% of your cash and put it to work this week. Buy dividend stocks, bond funds, invest in REITs. Get off the sidelines. Once you see that money working for you, seeing dividends hit your account or portfolio value rise, you'll wonder why you waited so long. If this video has opened your eyes and you realize you've been making a mistake with your cash, hit that like button, subscribe to the channel if you haven't, and drop a comment telling me what you're doing about it. Are you going to do things differently? Are you going to buy dividend stocks? Invest in bonds? Look at REITs. Tell me your plan, because when you write it down and put it out there publicly, you're more likely to follow through. That's human nature. This channel exists to give you the real talk that nobody else will give you. I'm not here to sugarcoat things or make you feel good about bad decisions. I'm here to tell you the truth even when it's uncomfortable. And the truth is, if you're sitting on a pile of cash right now, you're making a massive mistake. You're choosing to lose money. The good news is you can fix it today. You can turn this around and start building real wealth. The tools are available. The strategies work. So all you need to do is take action. Stop making excuses. Stop waiting for perfect conditions. Get your money working for you. Your future self will thank you. Now go out there and make it happen.